I firmly believe in terms of where gold will go, it is going to be significantly higher. In terms of really what we're looking at today, it's all about the dollar. You've got the dollar gaining significantly. Any of the losses we're seeing in gold are directly attributable to dollar strength. If gold were to go down here, I wouldn't expect it to go any lower than 27 and then return, but I'm exceedingly bullish. There are so many factors combined driving gold higher that I've revised my end of the year first quarter target now to 28.65 based on
the recent surge in gold prices can be attributed to various factors, such as escalating tensions in the Middle East, uncertainties related to the upcoming U.S. elections, and a transition towards more accommodative monetary policies. Market analysts suggest that amid global economic instability, investors increasingly turn to gold as a safe haven asset, leading to heightened demand and record-breaking price levels. Gary Wagner, editor of thegoldforecast.com, delves into a technical analysis of the gold and silver markets, emphasizing the clear uptrend in both metals. He highlights gold's breakout above $2,700 and silver's rise to 12-year highs. Wagner offers a detailed assessment of key resistance and support levels and technical chart patterns influencing market movements. He predicts gold will climb to $2,865 and silver will approach $41, pointing to factors such as geopolitical tensions, U.S. dollar strength, and Federal Reserve policy signals that continue to fuel the upward momentum of these precious metals. The dollar surged nearly 1% to 150.90 yen, its highest level since August 1st, marking the most significant aspect of the greenback's broad rally on Monday. It reached its strongest point against a basket of major currencies in nearly 3 months. Traders predict an 87% likelihood of a U.S. rate cut in November. Gary Wagner emphasizes that the pace at which the Federal Reserve makes adjustments is less critical than its clear signal to normalize interest rates. He adds that while the Fed may slow down its rate cuts, the key takeaway is its commitment to reaching a target of 3% to 3.5%. Wagner believes that unless unexpected economic challenges emerge, the Fed is unlikely to deviate from this plan, and a gradual, steady approach is the most favorable course of action. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 20% of you are subscribed, and we're aiming for 1,000. Your support will make a big difference.
I firmly believe in terms of where gold will go, it is going to be significantly higher. There will be peaks and troughs, obviously, but from this chart, that trend is strong. And that's the point that I want to make. And this is a standard candlestick chart. So in terms of really what we're looking at today, it's all about the dollar. You've got the dollar gaining significantly. Any of the losses we're seeing in gold are directly attributable to dollar strength. And that brings me to our basic forecasts and what we're looking at. And the primary chart that I typically use for my study. And as you said, yes, we were looking for gold to touch 2,700. That was precisely what we did. And this was at what we're calling a long primary third wave. A shallow correction we predicted could go to either 2635 or 2590. It took the easier path and only broke to 2635. And then we've steamrolled now past 2700. Record breaking day Friday, followed by, whether it's consolidation today, it's just dollar strength. So when I define the path to getting to where I believe this rally will terminate, I have updated our numbers. And it's based on the fact that I believe fully that we are in a final fifth wave. It's a primary wave. And there will be a series of rallies, waves 1, 3, and 5, interrupted by basic corrective periods or sideways trading action. Even if gold were to go down here, I wouldn't expect it to go any lower than 27 and then return. but I'm exceedingly bullish. There are so many factors combined driving gold higher that I've revised my end of the year first quarter target now to 28.65 based on the fabric of geopolitical concerns and the technical aspect being a extended fifth wave, which is why I've updated from our earlier call, which was about 2,800. Here's the thing about what the Fed's doing. I believe that their intent is to reduce real rates, Fed funds rates, by about a percentage this year, maybe only 0.75%, but inevitably to take it to 3 to 3.5%, normalize interest rates at some point next year, possibly 26, but they might get it done next year is my best estimate. The pace at which they pull these triggers is not as important as the fact that they have signaled that they will normalize rates. So whether they don't do another jumbo rate, which is pretty much out of the market in terms of the probability, it's good. That's healthy. We want to see rates slowly contract. We want to see the economies revitalize themselves and get healthy labor markets here as well as in Europe. And that's what's important. It's not going to be whether or not the Fed cuts rates by X, Y, or Z. It's we are here and their target is 3.5. The timeline to get there, that's what counts. And I don't think that aside from big changes, economic issues that they haven't dealt with or haven't seen coming, that's going to change their plan. So I think the fact that there is talk about the Fed slowing down the rate cuts, that's fine because they're still committed to normalizing rates. And so smooth is better in this case. I don't expect them to deviate from the track of 3 to 3.5% by mid to the end of next year.
While gold often commands the spotlight, some analysts recommend that investors also focus on silver, which has outperformed in the precious metals sector. In a notable shift for precious metals investors, silver has surged beyond the $33 per ounce mark, recording an impressive 5% increase. The precious metals market is experiencing unprecedented momentum, fueled by a mix of geopolitical tensions, economic uncertainties, and changing investor sentiment. Gary Wagner explains that silver has recently struggled to gain momentum, even as gold achieved fresh all-time highs. He believes the recent breakout in silver could significantly energize the market and forecasts silver reaching $41 by the end of the year, with the potential to hit $42 in the first quarter of next year. Wagner adds that the energy building up in silver, which has lagged behind gold, could drive a rapid, potentially parabolic move toward $40 per ounce. Now, let's redirect our attention to a video.
When we look at the chart on the screen, each candle represents 2 weeks. So we're looking at an extremely long-term view. We're looking at the point in time when we saw silver above $50. That's when gold first hit 1900. This long line down to the end of 2015-16 is the correction that occurred with silver, and in gold was sitting at about 1,020 right in this period. And when you look at what happened recently, it ran out of steam. And so we were getting points, even when gold was making all-time fresh highs, silver couldn't get out of its way. The breakout on Friday, I believe 6.5%, took us right to this area just above $33. Now, to a market technician, when you look at the areas it has surpassed all of the major areas of potential resistance up to April 2013. And you've got a good amount of history with showing that this area taken out will really energize this market, and the potential for silver, in my eyes, by the end of the year, $41. End of this year, first quarter, $42. That's a huge change from what I was looking at even 2 weeks ago. We hit a major milestone when we broke above this technical level last week. And that's key because look at it's taken everything out. And so it's kind of like clear skies out there, and there's plenty of room for silver to run. Absolutely. What I'm saying is the price that we are currently at is a key and critical point. The breakout took us right to this area. Incremental moves above this, say 34, 35, really signals that there's not major resistance till $40, $41. It's just not there. And there's been so much energy building up in silver because it hasn't moved. It has not kept up with gold. And why that happened is a mystery. I'm not going to attempt to even postulate an answer, but what I can say is on a technical basis, the breakout that happened last week is significant and should give silver the ability to quickly and possibly parabolically move to $40 per ounce.
As global economic dynamics continue to evolve, precious metals are expected to stay in the spotlight for investors looking to diversify their portfolios and protect against economic uncertainties. The present market conditions offer a strong case for precious metals bulls, but it's essential for individual investors to conduct thorough research and evaluate their personal financial circumstances before making any investment decisions. What recent trends in the precious metals market have caught your attention and why? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.